Hello everybody, hope you're doing very well and welcome to tonight's Contenders live stream where I am going to be going over the following. So the ICX chart of the week, then I'm going to be moving on to the EMA trading strategy that I have gone over briefly before, and I want to recap what I covered last time and then how to improve upon this. That was a really liked video that I done. Everybody seemed to love that EMA strategy because it's so simple. And so, yeah, I want to go over that again and then add tips onto it, okay, of where you can be looking to add into strength on retracements and then how you can get ideas of where the move is topping out, okay? So I'm going to cover that of like a... point 2.0, I guess, of the EMA strategy. So then after I've gone over the EMAs, I want to then cover trading all-time high breakouts, so ATH all-time highs, okay? And for the examples, I'm going to use Link and Matic because those are, Link as we're speaking is breaking out very nicely, okay? So Link is breaking out. And Matic, obviously, over the past week, saw that like 1,000% gain, like massive move, and how it was so easy to trade this. So I want to go over that basically, okay? And Link, you can use it like live in the moment. And then lastly, I'll go over a Bitcoin technical analysis, and then as always, ending with a question and answers related to tonight's stream if you have any. So yeah, let's go straight into ICX chart of the week. Okay, so this is like what I done on the champion stream. I done hot and what a move a hot has been. And this week I done ICX, and obviously it's against BTC pairs, and you can only long BTC pairs. So like when I do these chart of the weeks, like last week when I done hot for the champions, and this time when I'm doing ICX, like you can only long it. So there's not so much to think about really. It's just obviously deciding the long position, but yeah, like it's kind of easy for you all, I guess, when I do these BTC pairs, and that's what people liked. And so I said, oh, let's do it again because it's nice and easy. And obviously this was another substantial gainer, so happy faces, I imagine. So yeah. Icon, what was the trade? Why did I take it? Let's explain it. Cool. So let me just see. Yeah, no, let's begin. So Icon, here we go. So as shown here, so this was taken on the 19th. We're now on the 22nd, so 3 days ago. Okay. The entry was simply, just the entry was quite easy, and most of you actually got it because you know how you started to like see how I like to trade. So what we are looking at here, okay, so the long entry placed slightly below, okay, so you see where our entry is, it's slightly below the price. So basically there was a big sell-off the prior month prior to this movement here. This was a very big sell-off, over a 50% sell-off, bigger than a 50% in total, okay? So half of its value being lost in the space of a month is a massive sell-off, and obviously it becomes very oversold. And whether we get a dead cat bounce or we actually reverse here, either way it's a good area to be looking for trades when something is so oversold, okay? So we obviously saw that very big sell-off and then a 30% move to the upside, okay? And then we were looking to trade the retracement, okay, to get in where you could either be looking at this as an ABC or the start of a 1, 2, 3, okay? So that's what we're looking at here, okay, and that was an entry placed at 460 sats, which is basically a tiny little front run onto 618, which I can load up and show you, okay? So this is obviously the position here. And at the time, we were just seeing this, okay? So we're very simply taking our fibs from the swing low to the swing high, okay? And then you see the 618, okay? 618, very nice, okay? Where it literally hit it to the absolute tick. And we're also seeing on the 618, okay, we're also seeing that horizontal support. As you know, the orange line is sort of a 4-hour level that I use. So this is a horizontal combined with the 618. Not a difficult trade at all, okay? So then what are we looking at here? Okay, so take profit one obviously is for me, not obviously for audio view, I understand, but yeah, take profit one for me was 536 sats. Why 536 sats, and why do I have higher targets for Icon? Okay, and I'm back in Icon, by the way, so I'm still in the long on this, but yeah, take profit one, 536 sats, okay, and I'm going to show you now. Obviously, when we're looking at it, at this point in time, we have to remember that we only have this much data at the time that we're, entering this and targeting up. Obviously, we have this, just basically from horizontals, you can see that there's a clear resistance there, okay, so you do have clear resistance here, okay, and then on top of that, okay, we're taking a pitchfork at this time, okay, and we're taking a pitchfork from the swing low to the swing high to the swing low, okay? And we could imagine to ourselves that the pitchfork is going to be a target, okay? It was not my overall target. I have a higher target, but for the take profit one I'm explaining here, we obviously have a coinciding variables of really strong horizontal resistance. You can see here where we had support, resistance by big wicks, okay? And then you can see how this, really did nicely coincide with the pitchfork, which obviously is a target in itself. Okay, so we then had coinciding variables of the top of the pitchfork coinciding with resistance at the just the top of this move, basically. Okay, so that was for me take profit one. Okay, so obviously I took profits on this, and my overall target, which has not hit yet, but I am still in a long. Well, I took another long basically, but my take profit two is going to be this area of old consolidation up here. Okay, so this old area of consolidation, I will be aiming for this as my next take profit. So we're looking at around anywhere between really 560 up to 610 really. So we've got a big range around here, but that's our next high area of resistance. Okay, so that's what we'd be looking for next basically. Okay, so that's what's happened here? There we go. So yeah, that's where the targets were. Okay, so obviously, as I mentioned, the horizontals and the pitchfork target for the take profit one, and I have not wrote take about the I've just explained to you there that the 580 that I'm aiming for is this old area of consolidation. Okay, so that sort of region that I'm aiming for. Okay, so stop loss was placed at my area of invalidation for a wave 2. Okay, obviously if we were looking at this as either the B wave coming down or the wave 2. Okay, 435 sats. Okay, so 435 sats, which easier to show you on this chart. Okay, is below this. For me, I didn't really want to see us break below the golden pocket, because that's where you got a lot of buy side algos. So for me, the support, the high support level was the golden pocket, okay, and I just simply placing my stop loss down a tiny bit below the 786 just to give myself a bit of breathing room for this trade. Obviously with Bitcoin having fluctuations to the upside and to the downside, that affects altcoin setups to a certain extent, so that's why I gave myself a little bit of breathing room with the stop loss, basically, quite a wide stop loss. We're talking about 5%, but I'm aiming for a 26% gain. We're really looking at the risk reward, which is about 5 to 1, and obviously the stop loss really was perfectly calculated because it never hit. So yeah, that was nice. So yeah, that was why I placed the stop loss there, basically. Okay, and the reason for the trade, as mentioned, I'll read it out for you all though. So the coin had over a 50% retracement in 1 month and was thus oversold. Okay, from oversold we saw that 30% bounce upwards. Okay, and then we want to get in on the retracement back down. Okay, so buy was a slight front run on the 618 Fibonacci, which also had that strong horizontal support. Okay. So now what we are looking at here, okay, let me explain this trade of how it happened and how we went through and how I have now found myself in another long position. Okay, so what we're looking at here basically is, I will remove this now and remove the pitchfork a second as well, just to clear up this chart so you understand. Okay, so we have this now clear boundary defined as a clear support down here at around 460 and a clear resistance defined up here around 530. Okay, so this is a big range. Okay, bottom to the top of the range, we're talking 15%. Okay, so really big range. Okay, and what has happened within here, I'm going to remove this fib here. Okay, so what have we seen here? Obviously we were originally came up, we hit take profit one, which again was this pitchfork, okay, that we were looking at. Oh, where is my... Yep, there we are. So we're obviously looking at that pitchfork that we obviously have hit by the wick, where we have also seen that coinciding variable. Okay, so at this point, okay, we've hit take profit one, and this is how I do my trade. So this is, you want to do this probably as well. So when you hit take profit one, you move your stop loss up. Okay, so we are at this point, obviously we have our stop loss at the 786 originally. We hit take profit one, okay, so that's where you can close out, for example, anywhere up from 30%, I would say 30% upwards, however much you feel like, okay, and then we're obviously moving our stop loss from the 786, because we've hit take profit one, we're moving our stop loss up to the last low, really, okay, so at this point, we're moving our stop loss up to this region right here, okay. So that is just simply hit take profit one, move your stop loss up to the last higher low. Okay, and at this point, you could have potentially moved your stop loss up to here. I did move my stop loss up to here, but if you had not moved your stop loss, having it still down here, you'd still in the trade. Okay, I did move my stop loss up to this higher low because I could see the negative momentum. Basically, we reversed right off of the 618 here, so I did have a feeling that we were going to move down quite. I had this feeling getting rejected. I'll show you what I mean by getting rejected here. So obviously, then the fibs from the swing high to the swing low, we got rejected right off the golden pocket, like the wick through, and then a really bearish 2 candles. And at this point, I thought, it's likely. I didn't close out my position because I'm overall so bullish on altcoins still at the moment. Like, altcoins have just been the biggest money maker you can imagine. So I didn't want to close early out of this position, but I would have, I happily took the stop on the way back down of breaking the higher of this higher low. So yeah, I did move my stop after I saw that rejection, and I was hoping for continuation, obviously, to the higher target, but it didn't happen, and I got stopped out for the whole position, obviously in profits, because I've moved it from the 786 into profits at this point, and I've then hit take profit 1, and then got stopped out from losing this higher low at that point. Okay, yes, if you had kept your stops and you had not seen this rejection from the 618, and you kept your stops below the last higher low here, then obviously you're still in the trade. I got back into the trade, okay, and I think I have wrote about this because I took a picture. Yes, okay, cool. So let me read this out and I'll explain like why I got back into the long. Okay, so in my opinion, the trade went well. I literally got in on the wick of the entry of 460. I literally got in the wick of that. Okay, so I got perfect entry, and my take profit target also filled on the wick. I'm not a market maker, guys, but that is a entry on a wick and a sell on a wick. What pressure there. So yeah, in my opinion, it was very good, entries, stop losses, and targets. Although, yeah, the second take profit target has never hit. Okay, and obviously I then got stopped in profits as we lost this high after getting rejected from the 618. Okay, so it wasn't not an amazing trade, but obviously very good if we're honest. So yeah, the second take profit was never hit. Okay, so thoughts. This is like my personal thoughts, and I thought that this one might be helpful. So I will give you like my thoughts on the trade of how I could have improved, and then this should hopefully in turn help you. Okay, so yeah, instead of having my higher targets, okay, so obviously I had that higher target, I should have locked in more profits at take profit 1. Okay, so on this particular example, and it's not always a defined amount, exactly like 40%, but in this one I locked in 40% because I did see there was high resistance, and in hindsight, yeah, hindsight's beautiful, I should have locked in 60%, I think, because it was the pitchfork target, it was a really big horizontal resistance, and I was maybe getting a bit greedy, only locking in 40% at such a high target zone. So yeah, that's what I would say to myself on this trade. Next time, when you've identified such a original good target, instead of getting that little bit greedy, just take at least a higher percentage of profits at that resistance point. Okay, so that personally, I do think I got a little bit greedy on that trade, but it was a big alt season last week. And yeah, they were flowing. So yeah, that's what I would say. And then, as mentioned here, I got back into this trade. Okay, and let me show you here. So I got back into this long. Okay, and this was simply from another 618. So we're taking them from this swing low up to this swing high. Okay, and then we can see how we were supported by the 618, which also here coincides with the 200 EMA. Okay, so we can see here the 200 exponential moving average with the 618. That's what we call confluence with that horizontals. We're looking right here. Okay, I hope you can see. So then you see the 200, the 618, and that horizontal straight into that big support region. And so currently I'm sat in profits again. So yeah, it was a nice little. That was a little day trade, really. That's that's enough for a day trade. So yeah, that was chart of the week on Icon, and obviously I still have these higher targets, but yeah, and I'll stay in this long now either till I get stopped or it goes up, because I'm comfortable leaving Icon in this position from here. So yeah, obviously I have those higher targets, but if this now loses the 618, then I'll get stopped and I will just close out of the Icon position. That's simply how I'll be looking at that. Very, very easy. Okay, so yeah, that was Icon. Do you think it's in wave B right now? So in terms of, if we're looking at this of an AEB, really this is where I was hoping to get to of my target, obviously, and then we had like a clear 5-3, and I was moving up for this 5, and we still have the potential of this moving up for the 5. So I'd say it's in wave C until really. Obviously we've lost a high here, so we're coming into like an ending diagonal possibly, but it's obviously not going to be clean at all. So you are aware that we've lost this high, but still it's only by a wicks. So I am either holding this for the stop loss, or we hit my target up here, and when we can be looking at this as an ABC. Personally, that's how I'd be looking at it, as just as an ABC. So I'd say we're into C wave now, but if I do get stopped out of this position and we move down, then yeah, I'd recalculate this as just a tiny little C wave, which is really, really ugly. But yeah, you can't even see like a 5 subdivision in this. Like, in my opinion, it fits so much better to go upwards here. But yeah, that's how I'm looking at it. I would say that we're in wave C to come up here, rather than B down. But, you know, if we really break down, we know, for real, you know, ignoring any waves, if we break down from 475, really, this sort of region 470, then that's, you know, quite bearish, where you could take another entry from the double bottom of this 618. So you do have another entry from there. So, you know, you do have that double bottom sort of entry from the 618 support again if we come down this low. But yeah, that's basically how I'm looking at that. So yeah, that was Icon, and I hope that you all understand that setup. And obviously it was very, very nice. It was very nice, and obviously from the original entry, it's still in profits if I just left it. But you know, that's why you manage your trade and don't generally just leave it forever. Okay, and yeah. Very, very, very nice. And obviously Matic. So Matic, let me explain Matic really quickly of how today was such a nice scalp. So Matic was coming down to the 618, and this is what I like posted about in my group. I was like, yeah, I want to scalp trade Matic when it comes down to the 618, and obviously got front run by the 618 today, Matic. So it got slightly front run by the 618 on a horizontal support on the 1 hour, and then all I was looking for was a simple 5% gain, and this turned into a like 20%. It went from the 618 straight up to the 0.5, like really, really nice. Let me just show you, it would make more sense. So this was a 618 to a 0.5, okay? So look at this. Okay, so obviously on Matic, we're seeing this is the 618, this yellow line, okay? And then we're obviously coming back down, and this is on the 1 hour, but you can see here on the 5 minute, actually, it's fine as well. So we have support, 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 okay? Came back down for support, got that first original bounce, come back down for that double bottom, and this is what you're looking for on these double bottoms. You're coming back down to the double bottom area, okay? And then obviously, yeah, this was my option for the 5% scalp, and it just keeps running, okay? And at this point, you would I want to explain this a little bit later, actually, because this is what I'm going to be going over of moving up with the higher lows. But this is literally like a 20% bounce at this point, okay? Literally, so from the double bottom to where we are now, 20%. So yeah, that's really, really nice. But I want to cover Matic a little bit later. First, I want to go through the EMAs, and then we'll catch up on Matic and Link. But yeah, it's so brilliant. So yeah, the EMA strategy that I've covered for you all. I'm learning so much with these chart of the week lessons. Thanks, Daniel. No worries. Yeah, I'm glad you're learning from them. It's yeah, that's very, very good. And I also saw like the comments from like a few people that are like saying, yeah, they've played for the whole year of membership through like me bringing their attention to these coins, and that makes me really happy to know that you're also like making money and like learning at the same time. For me is great. So yeah, that makes me very happy, and congratulations on all the people that have like made 2 years worth of salary in yeah, it's crazy. Like wow, well done, basically, well done, honestly. And I'm happy to help you. So here we are going on to the EMA strategy, okay? So I do want to do a really quick recap because I have covered this before, but I'm going to really quickly recap it. Now I've done out some slides for it as well, and then how we can expand and make this better, okay? So this was like a really light strategy. So I want to cover it again and expand. So we'll call this the EMA 2.0, okay? So some little notes before we begin, that this strategy is best used on the 4 hour plus. This is in case you haven't seen it. Let's say the 4 hour plus timeframes, this strategy is best. Okay, all we need in this strategy, so this is slightly different from the other one, is the 26 exponential moving average, the 55 exponential moving average, and here in the picture is the 100, and out of shot is the 200. So you kind of just need 4 EMAs at this point. Okay, and that's obviously the 26 in orange, the 55 in yellow, the 100 in dark blue, and in green we're looking at the 200 exponential moving average. Okay, so the strategy, okay, so point number one, okay, you're looking for the 55 exponential moving average on the daily, well, 4 hour plus. Okay, I personally believe it works best on the daily, but you can go into the 4 hour, you'll be entering a lot more trades basically, but you know, it's fine. So but here, this is an example on the daily, as you can see on Bitcoin. So obviously we're seeing the 55 exponential moving average on the daily cross over the 26 exponential moving average, and then begins to fan out. Okay, and the term of fanning out in trading when you look at EMAs is where obviously here, you see here where the EMAs are so tight together, there's no space between them at all, okay? And this is, you know, real compact, tight exponential moving averages. They are fairly, you know, they're not a good strategy to trade from when they're so combined and tight. You want to see them fan out and gain space. That's when they are giving signals, basically, the EMAs. Okay, so when we see the EMAs fan out and you see clearly the 55 in yellow cross to the bottom of the 26 and you get a nice clear space between them, okay, that is the buy signal. Okay, so clear space between them. Okay, you could obviously take it straight away when they're still relatively close, but when they fan out like this and you're getting a clear space between the 55 and 26, that is the buy signal. When the 55 EMA crosses to the bottom, okay, that is your signal to buy. Okay, so let's go over this on Bitcoin again. I just want to recap it. Okay, so let's load up our exponential moving averages. Okay, we do not need that at the moment. Okay, and all we need on here, okay, as shown earlier, is really, we don't need this actually, the 12 here. So the 26, the 55, 100 and 200 exponential moving averages. Okay, so that's all that we need for this. Okay, and here we are. Let's go. So we are going to need to go over this on an older chart. So BTC USD on Bitstamp. Okay, let's use Bitstamp. Bitstamp is nice because you have so much history. Okay, so just good for like showing you, like recapping here what we're doing, or basically. Okay, so we can start when this first originally fanned out. Okay, so what are we looking for here? Here we go. So you see, price, the EMAs very compact and close. Okay, so this is not a signal in itself. Okay, so at this point you're just patiently waiting. You're just patiently waiting to enter into your long positions, or short if it crosses to the top. Okay, so if the 55 EMA crosses to the top, you are entering into a short position, and if it crosses to the bottom, you are entering into a long position. Okay, and I will take that question, Connor, once I finish this. Okay, so basically what we're looking at here is the crossover. That's the important thing. And then when it fans out, okay, so when it fans out, okay, that is your long signal entry. Okay, so you literally, okay, you have to remember this is quite a simple strategy if we're thinking about it. It is really simple, and I think that's why people liked it. So you're really simply just waiting for the 55 to cross over the 26 and fan out. Okay, this is your long signal entry. Okay, and at that point, obviously the last time that I covered this in the stream, it was simply just ride it all the way, don't do anything until it crosses all the way back over again. Okay, that was the strategy that I went over last time, which is obviously a little bit yeah, you're not really doing anything, you're just waiting. So it's not the most interactive, and it's obviously not the most profitable because you're simply doing nothing on the strategy. So this is adding a tiny bit more involvement basically, and it increases profits, and that's kind of what you want, isn't it? So you know, this is now moving on a little bit, just adding steps in. So I would call this 2.0 because we're adding in rather than just waiting the whole time. You know, you're making it a little bit better basically. Okay. But as with anything, the increase of risk adds more. The increase of reward adds more risk. So remember that, yeah. So yeah, with that said, you know, let's move on to what we're looking for. Okay, so basically, you are in the uptrend, and here, sorry, I've got the 100 EMA in white. Let me just change it to white so it's the same. Otherwise, that might confuse people. Okay, so what we're looking at here is the EMA 100, the EMA 55, the EMA 200 here. Okay, when you are in a daily uptrend, okay, so on the daily chart here, you're in a daily uptrend. Okay, so you see daily uptrend with higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, you know, higher lows, higher highs, okay, higher low, and then we go on to form another higher high at that point. Okay, that is called a daily uptrend. Okay, so when you're in a daily uptrend, you want to buy the dips. Okay, that's how you can make money, is buying these dips on the way back down. Okay, so when you obviously dip back down, you're looking to buy the dips. Where are you looking to buy the dips? Basically, fairly simply, you can obviously adjust this to depend how aggressive you are, but I personally become very aggressive in a bullish uptrend. So I'll be looking to add on the 55, the 100 and the 200 EMAs. Okay, and then you could be using your 200 EMA as a guidance of a stop loss. Okay, so you want to use this as a guidance, basically. You know, as with any strategy, you want to use it in confluence with something else. So, for example, here, let me just like show you what this would look like here. That when you see this 200 EMA that lines up with like a horizontal, then that is like confluence that could give you confidence in buying a retracement, for example. So you don't want to just blindly look at it. Like, you do try and do a little bit more technical analysis, but that's basically what you're doing, is you're looking to add on dips. Remember, in an uptrend, you want to be buying the dips. Okay, that's your good chance at getting good entry prices. Okay. So with that in mind, okay, so we've obviously entered into the long here, and at this point, you wouldn't have been necessarily adding on dips because you're not hitting the 55 EMA. The 26, you could be adding at the 26. I personally don't, because I want to get in a bit of better prices, so the 55, the 100, and the 200 at this point. And this is if I was literally just using the EMA strategy. I don't actually trade off of this alone, but this is a nice one for beginner traders in my opinion, and it's really, really, really profitable. But I like to maximize profits even more. Like, I don't use the base strategy like this, but it's still nice either way. But you obviously, yeah, you can maximize profits more, but that's for another video. So here we're obviously looking very nicely. Price breaks, it fans out, you're in your long position, you're just holding, okay, and the price obviously comes up, and this is where you get your first chance to buy on the retracement dips. Okay, so obviously price forms a very, very big climax, comes back down. Okay, so it's coming back down at this point, and you can see price hits the 55 where you're adding, and it got a strong bounce. Okay, come back down to the 100 where you're adding, and again the trend continues. Okay, what can you also add into this to help you get ideas? Okay, you'd simply taking your fibs, so a fib from the last swing low to the last swing high. Okay, and you see how well this coincides. So obviously you have the 382, the 0.5, and the 618. Okay, price generally doesn't lose the 618 in an uptrend, and generally speaking, it holds the 382. Okay, so this would have been known as a fake out in an uptrend. Okay, so generally speaking, you don't want to see it lose the 382. Obviously it can happen, and holding the 618 is still extremely bullish. Okay, but in this example, obviously price comes up very strongly. With such a strong parabolic move, it does have its retracements, so you retrace all the way down between the 0.5 and the 618. But most importantly for this strategy, we're adding on the 55, the 100. We don't get to add on the 200 at this point. Okay, but we had strong support at a 618. Okay, now moving on again, so we've just added in our positions, and price moves up for another higher high. Okay, so at this point, price has come up for another high, absolutely brilliant. You get this massive spinning top, but price comes back down again for the 55, the 100, and this time we get touched on the 200. Okay, so we've added fully into a position, and this is aggressive dip buying. Okay, aggressive dip buying. Let's add in our fibs again, so swing low to swing high. Okay, so at this point, you do lose the 618. Okay, so you do lose the 618, but we do not lose the 200 exponential moving average. Okay, so that's the strategy that we're looking at, the EMAs. But you can see here on the fibs, your confluence for support in this scenario was obviously the 786, where you had here support, 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 support. Okay, so that was your confluence. And obviously you did have this secondary really nice at the 0.5 in my opinion. And that's where you obviously see it coming down for a wick, coming back through. You see, you're kind of like a fake out. You get these fake outs in an uptrend, okay, where people get chopped up, okay. And really here we're seeing that the 55 EMA hold, the 200 EMA hold, and that is another really aggressive dip buying, where you're buying on the 55, 100, and 200, okay. So that is an aggressive dip buying, and it goes up again. Okay, so you have to remember we're on the daily chart here. This is a daily uptrend, very, very, very strong. Okay, so price starts to move up again. Okay, moves up again at this point, because you're not hitting the 55, 100, and 200, you're just holding. Okay, you're just holding in a daily uptrend. Okay, up it goes, and down we come again, where we reload on the 55 and a 100. We don't hit the 200, but again we could have looked for fibs as confluence from that swing low to that swing high. And you see here you held on the 0.5 fib. And where did that 0.5 fib come? On that old resistance right there. That flipped into support. Okay, so that's resistance, support, reacting as support between, again, the 0.5 and the 618. Okay, so once that has happened, we are moving up again. Okay, so we're moving up again, and look at this again. We're moved up again, and we are adding on the 55 and a 100. Don't get to add on the 200. Take your fibs from swing low to swing high. Look at this. Perfect, perfect, perfect. Look at that SR flip on the 618. Okay, so then you're seeing resistance, resistance, flip into support on the 618 golden pocket in a daily uptrend, just another chance to buy the dip. Okay, so then we're moving up again, and at this point you're in thousands of % of profit, by the way. But then obviously we're moving up again, and this is why we love crypto. At this point, we retrace down to the 55 EMA. We are always going to be updating our fibs from swing low to swing high, and you can see you're holding the 382 at this point. Okay, so we just got to add on the 0.5, the 55 exponential moving average, which coincided again with this region on the 382 of resistance, and resistance flipping into support. Okay, but obviously you're going to lose this at some point. But this is the thing, when it turns from a bull to a bear market, you've made so much profits, you know, it's yeah, you just have to think. Yeah, anyway, we're moving up again. Okay, and this is obviously where we come up, we form a high, you come back down for a low, and at this point we have not got the chance to rebuy in on any dips. Okay, and again you come up for the high at this point, and you all know this was the high of Bitcoin in 20k. You come back down for the low where you can add again on to 55, because at this point you have to remember, at this point you had you wouldn't have known using this strategy alone that the top was in, although now in hindsight we know the top was in, but in hindsight is a great thing. Okay, so we obviously added on to 55 here, and you come back up, and at this point, you know, you break back down. This is kind of a bearish sign in itself. If you hit your low and you come straight back up, okay, that still, though, is not making you close out your positions at this point. It's just a sign, basically. But you obviously hit your high, come back for your hello, hit the 100, where you can be adding again, and then you obviously see this crossover here, where you would have closed out break even right there of that 100 trade. Okay, so that would be your start sign to close out of the trade right there. That is the first cross that you had, okay, from way back in October. Okay, so this was one that ran from October 2017. It might have been actually October 16 that we started, up to 17, 15,000% gain. Okay, and now I want to show you a few different ways of how you can help try and see where the top is coming in. Okay, so this is where, you know, this is the risk. Okay, so I want to say that by trying to outguess the market. Okay, so this is obviously let me just go through these slides that I've made. So obviously we were adding in on the dips. Okay, so we're buying the dip in an uptrend, daily uptrend. Okay, don't forget to add in the Fibonacci retracements. Okay, from those swing lows to the swing highs. You can see here that, you know, the price come down to that 618 very, very nicely. Okay, and generally speaking, 382 to 618, it's our you know, don't generally retrace past that. Obviously, on all those examples, we retraced once to the 786, okay? And that was a slight front run on the 786 as well. Okay, and now this is where you want to have a little bit of caution, okay, with this strategy. Being a simple strategy, okay, if you try and make this too complex, you might have negative results. That's all I want to say. So with this is ways that you can identify that you're coming to the top, but with so many things, bearish divergences, you could sell early on bearish divergences. If you recognize bearish divergences, it's not going to play out every single time. Okay, so let me show you, for example, here how you know, in hindsight we know it was the top, and when looking, I just want to show you here on the RSI. We obviously, let me hide that volume as well. So, okay, so obviously, as shown here, you know, when you hit 20,000, you did form that higher high on RSI. Sorry, that higher high on price and that lower high on RSI. So that is bearish divergences. But as I wrote here, okay, so you form a higher high on price and your lower high on the RSI. So that's bearish divergences. But honestly, it's just a warning sign and not a sell signal. Okay, because you're in the daily uptrend. Okay, I would personally, if you're using this strategy, not try and outsmart the market at this point, because on the run up prior, you've seen bearish divergences and the trend continues. Okay, and you don't really want to be obviously it's up to you. You can use the strategy. I'm giving you this because it could help you, but you don't have to use this part. But obviously with bearish divergences, you can sometimes get bearish divergences in an uptrend and it will continue upwards. So this is just a optional add-on that you can try and second guess the market and get ahead of it. But not always this is going to work, and you'll see bearish divergences and the trend will continue upwards. But generally speaking, if you see these three peaks where you see obviously the high, the second high, so you get three peaks on the RSI, and obviously here the price is clearly going upwards. Okay. So that is bearish divergences at a major psychological. You have to remember that 20,000 itself is a major psychological number where people are going to be locking in profits. This is a coin that ran in the year like 15,000%. You know, nothing lasts forever. Okay, so that's where you did see those bearish divergences at the top, but I would honestly just say it's best used as a signal or a warning that the trend could possibly be reversing, rather than selling out here, because you're still in the daily uptrend. Okay, you're still adding on the 55s, and this is just a warning sign, basically, not a signal in itself. If we're being honest here, or if I'm being honest, I would use this only as a warning sign that the trend could possibly be turning over. Then obviously we closed out as the 55 EMA. Add that back on as that 55 EMA crosses to the downside, and I just want to remove that 12 seconds. Okay, so that is that part that I wanted to cover there. Okay, and let me go through the last few slides that I have on this. Okay, so that is where you close the long position as the 55 EMA crosses to the top, and that is where you obviously open your short positions. Okay, so when you open up your what was this? Okay, yeah. So as you cross over your as you cross that, get that bearish cross of the EMAs, you're obviously closing out your long that you've just rode for high percentage gains in this sort of scenario, and then you are entering into a short position. And as you all know, I've went through this, and I'm going to run through this in 2 minutes, so bear with me. Okay, we're entering into our short position. Okay, price obviously very nicely comes down, comes down. At this point, you don't have a scenario to add on to, because it's obviously the top one. Okay, so at this point, it's kind of you don't have a necessarily a way to add, and you have to be going off of other factors. Okay, well, we can still be taking our fibs from last swing high to swing low. Okay, here we're hitting the 0.5, where you could, if you then turned this from a daily uptrend to a daily downtrend, adding between the 382 to the 618 is generally a good idea, because again, we're aggressively playing it to the upside and now aggressively playing it to the downside as well. Okay, so we're entering into shorts because we've had that bearish cross, and then for adding, okay, we can be looking for these 0.5, anywhere 382 to the 618 really. Okay, so we've obviously had that bearish cross. Okay, still riding this out, hasn't crossed, and this is where you do have the cross. Okay, so you do have a cross here in it. You do get a bit of space. Obviously, it ended up being a fake out. Okay, but you could have also looked at this, swing high to swing. Okay, swing high to swing low. Okay, and you never got through the golden pocket. So this is like, I personally would always be using this above the EMAs, because I'm not so much an EMA just basic trader like that. But yeah, this is, in my opinion, where you would have just been looking at it still bearishly, because you haven't broken any of the golden pocket or closed above the golden pocket. But if you're abiding by this strategy very nicely, then you would have actually closed your short and entered into a long. Okay, we have to remember that you've just won a 15,000% trade, followed by this very massive short position that you entered in, and you overall you're making great money. Okay, but that would have been a losing, we'll just put it as a losing trade there. So this is a losing trade. Okay, let's just say it was a losing trade. Okay, then again, what did we do here? We entered into a short as the 55 crosses to the 26 in a bearish scenario. Price then obviously comes down greatly. Okay, and at this point we're taking our fibs from swing high down to the swing low, and look again here, getting rejected by the golden pocket. And again, this is what I trade off more, but in terms of fibs, you did have that crossover here where you could have taken a long position at this point and got stopped out very shortly, so that would have been a losing trade right there. Okay, in terms of EMAs, but in my opinion, looking at the fibs, you never get a touch over the golden pocket at all. So I'll give you both scenarios, but yeah, that will say that's another losing trade right there. Okay, let me just close out of this. So that was another losing trade. I'm going to say it was a losing trade. Okay, and then again, we enter into a short though position at this point because it's crossed bearishly. Okay, add our fibs in again from swing high to swing low. Okay, well, you can be adding, remember, we're adding into the short on 382 to 618. So here you obviously got your bearish cross, and price obviously here doesn't quite reach the 618. We get rejected by this old consolidation period, and price, as you all know, ended with a massive sell-off. And this was a short that you would have taken in August, and you rode this short position all the way down to the 2nd of March, which was 6,000 to 3,500. And then guess what? You took a long position on this crossover back in March. Okay, so here you go long, because remembering This was the cross at this point, so we crossed over bullishly, so you would have entered into a long position at 3,800, and guess what? You are still in your long position right now on Bitcoin at 7,900. So the strategy, as you can see, we will say that it's lost 3 times in the past 3 years, and overall in percentage gains you are up thousands of percent using such a simple strategy. Okay, it would have been getting you to buy at 3,000 at this current movement that we're seeing right now live on Bitcoin, and we're sat at nearly 8,000. So you can see the power in the strategy. Okay, and then again, you can be looking to add if we come down to these levels, because this is now a daily uptrend, so you are aggressively buying these levels, okay? Because if it plays out anything like this is a big money maker, okay? So you're aggressively buying the dips, okay? And again, taking from swing low, okay? So from swing low to swing high, you see that we came down and retraced exactly to the 382, which also, as you all know, coincided with this right here, okay? That right there, that whole region that we were obviously in 2018 seeing as big resistance, flipping into support on the 382 there, and obviously we had that CME futures gap fill. But yeah, that was a nice retracement in my opinion, daily uptrend onto the 26 EMA combining with the 382. Nice for me, a very nice opportunity to buy the dip. But yeah, that's the strategy that you're looking at there. And yeah, I hope that makes sense to you all. It's not too difficult, I must admit. It is relatively easy. So yeah, like as with every, I would always say your strategy in trading doesn't have to be complicated. I'm not going to lie, but I prefer adding a little bit more complexity because I like to maximize profits fully. But in terms of just using this strategy on its own, undeniably you can not argue that this has not been profitable on cryptocurrency. So yeah, very, very nice strategy in my opinion, and I hope that has like explained it a little bit further of how you can be looking to add on dips rather than just holding it for that 15% gain. You've been adding in, so that 15% gain has turned into like 50,000% gain, ridiculous numbers. Okay, absolutely, yeah, crazy gains. But that's where you can be maximizing profits to a certain extent more on adding on dips in a daily uptrend, and obviously when you're on that daily downtrend, adding into short positions as you were doing throughout 2018. So yeah, that is the strategy, and I hope that you have all understood that. Okay, so what is a front run? A front run basically is this. So let's say that you had your fibs from the 0 point, you had your fibs, and the a lot of people, for example, are going to be buying the 382. So you place your bids a little bit above the 382 to front run the level, because if everybody wants to buy the 382, you have to put your bids a little bit in front of it, okay, to actually get filled. So that's what a front run is. Okay, and how do you set alerts on it? It seems I always miss them, but only look on 4 hour would help. Okay, this is relatively like not that hard to miss in my opinion. If you're looking at this on the daily, you have so much time. Like you literally had to check like once a day or once a week. It shouldn't be too hard to miss this trade, if I'm honest, because look, you have so much time on the crossovers. You have so much time to get into trades. You really shouldn't be missing the trades. It's so easy, the strategy. You shouldn't be missing it. But I guess you just have to check once a day. That this is not going to change quickly, basically. So if you just check once a day and check for the crossover, you shouldn't really be missing a trade. On adding on the dips, you're going to have to monitor that slightly, where let's say, for example, we're wanting to add on the 55 EMA. We'd have to right click here, add alert of the crossing, create, and then we would have to adjust this alert every day to the 55 EMA. So as this moves up, as it's going to be doing over the next few days, you'd be moving this up slightly. So then as it comes down to the 55 EMA, you're alerted to get ready to add on it. So that's what I would say you should be doing, is just create an alert on the EMAs, and then you're going to be alerted as it goes through. Okay. Yeah, so there you go. That's a nice strategy, isn't it? Yeah, this strategy personally, I think works best on the daily. Okay, so you can use it on the 4 hour, as you see here. Okay, on the 4 hour, it's worked absolutely brilliantly as well. Okay, but you just take more positions. Okay, so you'd have took your long on the 4 hour. So you really see a crossover. I mean, this is not fanning out, so you really would have took your long around here at around 3,800, and then you would have rode it up to around 5,200, where you would have closed out of this and took a short. Obviously, the short didn't play so successfully. You would have break even more or less. Yeah, you little loss, but you would have got into your long position fairly swiftly after. Okay, so around 5,400. Okay, back into the, or really at this point you have to remember the price is up here, so 5,700. Okay, and then you would still be in that long position because it's not crossed over. So yeah, you can see there on the 4 hour it works fine. I personally think it works best on the daily, but you know, in a strong trending market, you can definitely go down to the 4 hour and it works absolutely fine. But you know, you just take more positions in terms of, you know, you just take more positions. Okay. Cool. So there we go. So yeah, that's what I wanted to explain there. And then I want to go over Matic and Link. And this one's Link I added in for Ed, a champion member, and he likes Link, and I also like Link. So yeah, I want to cover Link, and I also want to go over it on Matic, because those are the two that I've used this on literally over the past week, and it has worked absolutely amazingly. Okay, so this is what's known as just the trading stop loss in a bullish breakout. Okay, so basically this is all-time highs. Okay, so Matic and Link both broke all-time highs this week. So that's obviously a very bullish trend if you're breaking all-time highs. And at all-time highs, you generally don't want to be trying to sell the top, because it can just keep running basically. Okay, so let's go over. I'll use Link as the first example, and then I'll go over Matic. Okay, so Link, here we go on Link. Okay, so we're looking at a 1 hour trend here. Okay, so as mentioned in this screen. Okay, actually I didn't mention it, sorry. I thought I wrote about this. Okay, so we're obviously seen originally on Link, and this is one that I went over in the champion stream, I think it was, with our harmonic patterns. We were looking at this before this big move up. But basically it was looking really nice, forming a bullish harmonic at this point. Never reached the 886, but it held the 786 perfectly. So this is what we were looking at basically. Okay, so we were looking at this, okay, from swing lows to swing highs overall. Okay, oh, I can't remember what we got in. Yeah, here we go. So this was our fibs that we were looking at. Okay, from this swing low to this swing high, we came down to the 786, but more importantly, we were holding this perfectly as support at this point. Okay, well, we were looking for the 886, it never come down, and you had this, obviously, and I zoom in on the 1 hour here and show you. This is the support that held absolutely amazingly. Okay, so let me just hide everything and hide this. Okay, so this was the signal, okay, to basically look for a long, where you see the weekly sort of support just holding, okay, and then you get this zooming in, then you start to form your higher highs and higher lows. At this point, again, you start to break upwards with a really big move, okay, really big move to the upside at this point, okay, from the swing low to the swing high. Where do you retrace down to? The 0.5, which coincides, you can just see really nicely, with this old sort of resistance, support, resistance, this whole region below you, that is great support. So obviously you form up and you break down in this sort of bull flag for continuation to the upside. So obviously come down in that bull flag right there, and that breaks upwards very bullishly. Okay, so that's what we were seeing at this point. Okay, and that's where you're entering into your long positions. Okay, so from this long position, what are we looking at here? Okay, so the strategy of this is basically in a very bullish trend / all-time high breakout, which both of these coins have had. We don't want to try and second guess the market of catching the tops, because you can make a lot more money trading stop losses. Okay, obviously you can get targets of upper side targets by taking fib extensions, etc. But these coins all smashed through fib extension targets, so I'll just tell you this. Okay, but basically we're just training. It's so easy training the stop losses up for the higher lows. Okay, so at this point on Link, you form your high, you come down in your bull flag, and you break upwards. Okay, as we take out the high, so we're waiting for this high here to be taken. Once this high gets taken and you form a low, higher high, higher low, and you form a higher high at this point. Okay, so that's your bullish uptrend. Okay, and once we've taken out that high, we can move up our stop loss to the next potential next lower high. Okay, so at this point you've gone from low to high to low to high. Okay, we can move our stop loss up to this point. Okay, and then you can see here you're going higher high, higher low, higher high, higher low, higher high, higher low, breaking the highs, move the stop loss up. Okay, so then we go higher high, higher low, higher high, higher low, breaking the highs, move the stop loss up. Okay, we're going higher high, higher low, breaking the high, move the stop loss up. Okay, at this point we go higher high, higher low, breaking the highs, move the stop loss up. Okay, now we're going higher high, higher low, higher highs, moving the stop loss up. Okay, how simple is that? And you're still in your long position. You're not trying to second guess the market. And that literally from the bull flag entry to where you are now is 84% gain in 6 days. Okay, so like 1 week, let's say. That was a really nice one. Link, and it's still going. This could turn into a Matic. And now I'll go over on Matic because this was perfect. Oh, and this has moved up again since we're speaking. Great, nice. So basically, this is a really similar strategy where originally on Matic, okay, you obviously done really similar where you come down here to the 0.5 where obviously it was so I got into this around here. I made the YouTube video where I was getting into Matic around here, and that was on another bull flag. But yeah, I got an amazing entry. But I want to show you, obviously, at this point, you come down in that parallel, you break to the upside, and when you take the highs, this is the important bit, you take those highs, okay? So once you take those highs, you've then formed a very bullish higher high, higher low, you've gone on to form a higher high, okay? So you're in your long position even for the bull flag or the breakout trade, okay? Let's say you're in it from the bull flag. Okay, that's your optimal entry, 0.5 bull flag, very nice. Okay, and then you ride this again. Okay, so you break the highs. Okay, so then you break the highs, you come down for a lower high, you break the higher highs, move the stop loss up. Okay, up again. Okay, we move up for the high, come down for the low, break the highs, move up the stop loss. Okay, I want to keep that on. And then at this point, you break the highs, come down for the low. You haven't broke the higher low, so you're just in your position forming a symmetrical triangle here. Okay, and then you break the highs, you break this high here, move your stop loss up. And I'll just show you the importance of this area. So you see how here we formed a higher high, higher high, higher high. Oh, sorry, higher low, higher low, higher low. Apologies. And this old higher low has what we've just bounced off right today. Okay, when oh no, we're not at that point right now. We're not at that point right now. Okay, but this was obviously our symmetrical sort of triangle that broke to the upside. Okay, and at this point we are moving up these stop losses with the higher lows. Okay, so then you hit your higher high, higher low, take the high, move that stop loss up to this higher low. Okay, and then we're moving up again. You form your high, higher low, you take out the highs, move up your stop loss again, and this is the one that I was trying to show you, that this old consolidation period here is where we bounced off of today. Sorry. And then we obviously move up again. Okay, and at this point we form our higher high, higher low. You break through the highs, move up the stop loss again. Okay, and then at this point you take the highs, you lose the highs. Okay, you come up for a lower high and you break down from the lows. Okay, and then you obviously get stopped out, not moving up your stop loss all the way. Okay, but you have to remember that still, this is where, you know, it's yeah, you don't maximize the whole amount of profits, but if you were closed out, for example, at a 1618, you were closing much lower in terms of targets. And you have to remember, from that bull flag to the stop, that's 300% gain in you're talking about 5 days. So yeah, basically it's just on an all-time high breakout. It's works really nice to trail stop losses under higher lows. Okay, so when you're trading those stop losses, you can just maximize profits. And for example, I'll show you like where we were originally looking at that extension. So obviously from the high to the low, you can see the 1618 that you found resistance. Okay, you found resistance on the 1618 where absolutely you can take profits here. But you know, if you're trading your stop losses and taking profits, what you can do is take profits on the 1618 and add in on the retracement. Okay, so obviously when you're looking at this, so you can take profits at the 1618. Okay, where you can take, you know, 20-30%. Okay, then add back in. You see that you come back down onto the 382. That's your retracement buy-in. Definitely in an uptrend. Like between the 382 and the 618 is such a strong buy in an uptrend. Okay, so you can take profits, but then you're just adding them back in at a better price. So you're maximizing those profits. Okay, you see at the 2 again. So you hit the 2, you come back down. Okay, where you can take profits at the 2 because 16182, these are all like take profit targets. And you see again, you take profits and you come back down to the 382 where you add back in because it's an uptrend and this is like moving crazily. Okay, so again, at the 3618, you know, you hit the 3618, you come back down. Okay, oops. So at the 3618, you can be taking profits, taking from your swing low to swing high. Where do you come back down to? You actually come all the way down to the 0.5. Okay, so this is just better because you can get in more buys. Okay, and that's obviously then giving you another chance where we can actually add in some more higher numbers here. Okay, I'm not gonna do that extension, but basically, yeah, you move on again. and eventually you get stopped out of the move. But because you like maximize your profits, this is like a coin that moved from its low to high 1,000% in 1 week. So this has been a crazy mover, and you just want to like maximize those profits because coins don't move 1,000% often. So when you get a coin that's in this sort of uptrend, you want to maximize profits every single day, and just make sure you're locking them in. Okay, adding back on the retracement. Obviously, as you all know now, it's obviously come down into a downtrend, and you know that's the fun of the move. That was the week of 1,000%, and now it's coming into a downtrend. But you know what we were obviously looking at here originally, and this is where I can explain to you the front run. So okay, from the swing lows to the swing highs, okay, you're wanting to look in for a 618 of 1,000% coin like this. Okay, and then obviously you get the slight front run on the 618. So many people want to buy the 618, you know, so many people want to just buy it. So you have to front run. Okay, you have to put your bids above the 1618 because you're not going to get filled otherwise. Okay, so then you have to put your front run. Where can you see a good place to front run the 618 here? Well, you know, quite clearly you have this region of support here with a long lower wick. Okay, so that long lower wick, that's a clear support. Okay, you're above and you're expecting support again. So this is a good front run, or simply laddering from the 0.5 to the 618 with a more weight at the 618. Okay, for example, you're placing, you know, 10 bids, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, but you're not going 10%, 10%, 10%, 10%. You're using like 2% at the start, and your last sort of bids are higher basically. So then you get a weighted price which is nearer the bottom. Okay. So that's like ways you can do that. But yeah, this was simply easier to just do a front run on the 618, to be honest, and using that as your guidance. And obviously, as mentioned earlier, this was like a front run from the 618 to the 0.5, you know, target, and that's a 20% in literally like as you can see here, 2 hours for 20%. Not bad. Not bad at all. So yeah, that was what I wanted to cover for you all, with Link and with Matic, or just how generally you can trade all-time high breakouts. So this one I actually covered in a private lesson for somebody yesterday as we were sat around here, and we were coming up to the all-time high breakouts. Okay, we were coming up to it, and we were sat around here, and as I was in my lesson with him, and I said, get ready, this is going to be breaking, just trail your stop losses, just do not sell this, and just trail your stop losses. You're going to make so much profit tomorrow. And how do you know? We broke up, and the guy is actually a champion member, so he's in the stream today. So yeah, we obviously broke up from the highs and just simply trading those stop losses from the entry. Okay, he got in a little bit later, but still, nevertheless, trading those stop losses, you know, sat in profits at the moment, okay, where you were looking at your stop loss for, you know, really, yeah, here. So, you know, you're in profits at the moment, and that's from yesterday to today. That's like nearly a 30% gain from that entry last night, and this was late last night. So, yeah, that was a very nice move. And I said I'm going to mention this in the stream tomorrow because it's really, really good way of trading all-time high breakouts, okay? Because you don't want to try and be selling the tops. You just want to try and maximize profits on these sort of moves, okay? So I hope that's made sense to you all. And that basically is what I wanted to cover there. So I've done the ICX chart, done the EMA strategy, what I'll call EMA 2.0, and then obviously we've done the trading the all-time high breakouts using Matic/Link as an example, and that's trading your stop losses. So you have to move it up. Let's say you don't have 3 commas and you're on Binance, you're going to have to manually do this each time. So you're going to have to manually enter your new stop loss, so that can be time consuming. On 3 commas, it's really easy, but you know, if you're not on 3 commas, then just use Binance and just trail your stop losses up manually. Okay, so that's how you just have to do it. And now I'd like to end, with a technical analysis on Bitcoin. And then any questions that people have, begin to type your questions now, by the way. So if you have a question about what I've covered today, then please write the question now, and then I will get to it like once I've finished here, okay? Because there's not really too much to cover. I think you all know like my how I'm viewing this market now, but yeah, like I remain bullish basically while we're in a daily uptrend, while we hold key supports. Key supports for me, obviously the 382, and secondary key support is obviously the 618, well, golden pocket. So while we hold these key supports, I remain bullish, and you know, even if we break down to lows now, I've maximized profits in the uptrend. I really have. So yeah, that's all I'd say. Obviously, you'll know I'm leaning definitely to the bullish side with this daily uptrend. It's hard not to be, basically. But when we zoom into these lower time frames, you can see these sort of signs that you possibly topping out. You know, really, I would say that we're not. Obviously, this trend line that we're looking at here for support lost the trend, acted as resistance, and you start to move back down. So that's obviously a clear that this is more day trading though. You know, you take your short at this position and you trade it back down, but not for a long-term swing trade. This is more of a day trading, you know, trend line without a doubt. So overall, you're looking at this parallel channel, okay, where you've got a really nicely defined support and a really nicely defined resistance, and we're just simply hovering around the midpoint, which is where you get those nice moves on your altcoins, okay. That's basically what you're looking for. And yeah, so obviously, as I mentioned before, like the bump and run pattern that I was looking at, okay, obviously for this bump and run, we're obviously still looking at that 10k region. Okay, so the target's still for the top of the bump and run. Well, obviously we had our phase in phase, our bump, and then our uphill run. So our uphill run target is around 9,500 to 10,000. That's the target for the bump bump and run there that we're looking at, and that still remains my target. Okay, not too much complexity in this. Obviously, when I'm day trading this, I am actually not day trading Bitcoin too much. I'm just so much focusing on alts because, you know, look at today. Bitcoin's moved 0.7%, and some of my favorite alts to trade, ENG up 8%. Okay, Link obviously a big one, up 20%. ZIL, okay, where's ZIL? Up, excuse me. ZIL up 12%. You know, so there's definitely much more opportunity in the alts. So I aggressively trade alts rather than trading this sideways trend, pretty much. Yeah, I like to maximize those profits. So questions, okay. So Link and Matic still running. Link is definitely still running. Okay, Link is 100% still running. You know, we've not lost any of the high lows. Matic not so much. Matic has lost its uptrend. Okay, so Matic has definitely lost its uptrend. Well, on the macro, it hasn't lost its uptrend. Okay, so on the macro, okay, you haven't lost your uptrend and you're just coming down to a 618. But it's lost the 1 hour uptrend, and that's where I prefer to trade off this 1 hour uptrend, and we have now lost it. And now you can see the downtrend that you're on with the lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is just another lower high, and that's why, you know, just how I like to do it, just trade from the 618 to the 0.5, and then I'd get interested again in a long if we take these highs. Okay, so you're looking at around, say, 345 sats. 300, I'd say safe, about 348 sats before you break out of this trend properly. So yeah, you're in a daily, well, not daily, yeah, you're in an hourly downtrend, so you don't really want to get too aggressive in an hourly downtrend. You know, this was maximum financial gain in the uptrend, and in the downtrend, when you can't short this, it's on Binance, you can't short it. So yeah, it's in an hourly downtrend. So before I got interested in like swing positions again for the long, where, you know, if you're looking at that as a wave 1 for a 2, coming up for the 3, yeah, that's obviously the potential, but you need to see some of these highs get taken first, before, you know, and breaking out of that hourly downtrend at this point. So yeah, that's basically what I'd like to see on Matic. I want to see the highs taken, and otherwise it's just day trading this coin, because the good thing about day trading this coin, okay, is literally you have, you know, today, for example, you know, from the morning when I woke up, so this saw an 8%, okay, oh, actually in total 14, I closed out at 8%, but I had that 14% bounce, and then obviously, as you all know, that was another 20% bounce there. So like day trading the coin is really nice, but for swings, I need to see that high get taken out basically before I get interested in a swing on this. Okay, so can you say something about the 10 moving average, 20 moving average trading strategy? Is that good as well, just like you have covered? Yeah, don't use it, my friend. So I teach what I use. I don't use 10 moving average, so cannot comment, to be honest. Obviously, each trader uses their own, like every trader will have their moving average which they think works best. I personally love these moving averages on crypto. They are so amazing. I use them really, really well. So I can just teach you what I use. Like, I don't know, I don't use the 10 moving average, so I can give you zero comment, unfortunately. I would have to say to you, maybe change up your EMAs, use a different EMA than mine. You don't have to follow what I use. I use it extremely well, but you don't have to do what I do. So, you can try with the 10 and 20 moving averages and see if that works for you or better than this. Okay. And if it does, you absolutely make your own strategy with it. So, this is not, built into steel. You don't have to follow what I do. I'm just showing you like the guidance, and then absolutely you can like take what I know and morph it, okay, into your own trading strategy. Okay, so that's what I would say is best as well. So I basically the answer is 10 and 20 moving averages I don't use, so I cannot really give you a good answer of that. Okay, so Connor, what is the fib extension for link? So link actually is like not the count on link. Let me show you, because it was like so choppy, okay, prior. Okay, so I'll show you what this was like. Okay, so this was originally, I can remember I covered this a while ago. You're obviously in that really nice trend. Okay, obviously in that really nice. So this was, see how close we got to this. So this is one that I'm sure that I covered. I 100% covered this for you all in a this would have been an average stream. I definitely covered this channel for you all, and this was where we obviously broke from the channel, but we come down to this support, and I can remember I covered this. Okay, we were inside the channel, you broke from the channel, we were holding it, we lost it, but we come back down to the old resistance at this point, okay, flipped it into support, and you see where we're coming up to, and this is like, in terms of the target of the channel, this has got within 1%, okay, so from that old support that we literally held for a few weeks perfectly, that got 130% gain, so like, yeah, amazing, yeah. But yeah, that I can remember covering that parallel. Yeah, so that was nice. And obviously, if you missed out on the original move, this actually came down for its double bottom as well, didn't it? So obviously, if you missed out on the original pump, so this was an original, obviously you have your accumulation. It gets that 40% pump, comes straight back down, okay? You take out the lows, but you come back up and close above, okay? So then you had your second chance, okay? If you missed out originally, you had your second chance on Link, basically, for a very nice double bottom play right there, which obviously then, as you know, moved up to that top of that channel. So, Link was not too difficult. Hello, everyone. Have to cut out. Okay, cool. Have a good time. Have a good time. And that is everything that I wanted to cover in tonight's stream. So yeah, I imagine that's the questions. As if you have any other questions, I'll stay for a minute or so. If there is any other questions, if not, I'll cut out. And I hope that you've enjoyed tonight's stream, going through the EMA strategy, which is really, really powerful, you have to admit, and then how to trade those all-time high breakouts / really bullish daily uptrends. Okay. Yeah, in terms of Bitcoin, like, I don't need to go over in too much detail. You all know how I feel. Okay. And secondly, I do this in a public video, so I don't need to like cover it too much for you all. I don't want to, that's what I'm saying. Is that on the daily? So, is Link on the daily? Yes, that was on the daily. Where would you get into Link now? Yeah, like on these sort of moves, you have to be like always like careful. You're buying on, it's not really too good idea. Like on Matic, like the same, like you're in that daily uptrend, so you want to like get in. You have to be like really careful. Like I've always say you're too late to the move now. But if you really want to get in on the move after it's already up 100%, then you can do that. Absolutely, but you'd have to be, for example, buying in like now and using the higher low as your stop loss. Okay, so you not financial advice. I wouldn't advise people to get in at these levels, but if you want to get in and you're really bullish, then you'd be looking for a buy literally now to the 618 stop loss. Maybe you could have a little bit of a lower stop loss because you're so late to the move, but really you could be looking for a lower stop loss and looking for the retracement like this possibly. Basically you've missed the move in my opinion, but because this is like the thing, like trading your stop losses, this could run another 100%. great, absolutely. But if you're buying at these levels, you know, obviously when you break all-time highs, and it can go really parabolic when you break all-time highs, and that literally happened this morning, and that would have been a good opportunity to buy this dip, but now you're above, and like, yeah, I understand why you might want to get in. Absolutely, I understand. So if you want to get in, basically, I'd be looking to buy like now, then using my stop loss really below these lows. And then letting it run, and if you get stopped out, then you can learn a lesson of like not buying into a move that's already gone 100%. But if it runs up another 100%, then yeah, maybe you won't learn that lesson. But you know, that's how I'd look at it basically. You know, I always say you're too late to the move, but yeah. Yeah, no worries. Yeah, thank you everybody. Thank you, thank you, thank you. No, I'm glad that you all enjoyed. Great trading lesson, thanks. No worries at all. Yeah, glad you all enjoyed. I will wrap up the stream then now, and obviously the champion stream I'll see you on Sunday, and the contenders I will see you next week. I'm trying to always try, well, I'm always going to keep them to Wednesday, so they will always be kept to a Wednesday, okay? And yeah, there you go. So I will write to you. I'll see you all in the Discord. Hopefully you've all enjoyed tonight and learnt a lot from it. And yeah, that was obviously going over the EMAs, and yeah, next week we can move on. So yeah, thank you everybody. Glad you've enjoyed, and I will catch you in the next one. Thank you. Cheers. Good night. Bye.